Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all of our great podcasts at americastalking.com. To support Everyday Economics, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Monday, May 15th. And joining me, as always, is Dr. Orphe Divounguy, PhD economist. Dr. O, I want to talk about the homebuilder confidence report that is due out Tuesday. In the recent few months, homebuilders have been pretty positive despite rising mortgage rates. 4 months in a row, the home builders survey, their confidence survey increased. And so, first of all, I'm going to ask you to explain. The confidence gauge number is 45, and that was up from 44 in March into April. What does that mean?
It's just an index. The best way to use it is to compare it over time, right? And so what we're seeing is it's gone up. It's gone up for 4 consecutive months. And what does the index actually tell us? Maybe that's the thing we should tell our listeners is that it's a survey. It's a survey. And so it captures kind of how home builders feel about the housing market. And the index has been very, very good at predicting the state of the housing market in the past historically, right? And so it is nice to track it and keep an eye on what builders are doing or what builders are saying. And right now we're seeing 4 consecutive months of uptick in home builder confidence. And it makes sense, honestly. It really makes sense. We know that existing home sales had fallen when compared to a year ago, but that the housing market was rebounding in the spring. The buyers showed up pretty strongly. Buyers showed up. You're almost back to a kind of a normal spring housing market spring activity, except for one thing. There's just not enough units. Existing homeowners are not putting their homes up for sale. And so there's no existing homes. There's not enough existing homes coming on the market. And so builders are getting a higher share of all activity. So the builder market share has increased. New construction share of activity has increased. And so, of course, that's a good thing for builders.
As far as it goes, the bets that the home builders have to make, they're long term. You can't just wave a wand and a house appears. And, the vast majority of housing in the United States today is planned, goes through an arduous planning process. Sites are identified, land is acquired, variances are requested from local municipalities. There's an entire, and forgive me, I'm doing this process absolutely no justice. This is not my space. But again, what the point I'm trying to make is that this is a long road to build homes.
They have to forecast the stuff and they have to be right? Because they're building today for tomorrow. They're building today for 8 to 10 months down the road.
So help me to understand. So based on this report, does that suggest that we are going to see a continued uptick in new homes being released in the next 10, 12, 14, 16 months? What does this confidence rating mean to the average person that's listening? They're like, hey, great, super excited that the home builders are confident about the future of the market. What does it mean to me?
Builders are proceeding with caution is what I want to say. They're seeing that there are a ton of buyers waiting in the wings and that buyer demand is remaining pretty strong. Builders are telling you where they think the housing market is going to be tomorrow in the future. They anticipate that demand will still be somewhat robust, that because of higher interest rates, existing homeowners are not going to be flooding the market with units, right? These homeowners are sitting very comfortably, are not desperate to sell. And so builders expect to continue to capture a larger share of the housing market activity. And that's why they're feeling better about the future. The typical home value climbed by 1% from March to April, and we saw price gains. And even in some of the most expensive places in the country where we had seen massive declines, right? Look, compared to last year, home values in Austin were down 10%, San Francisco 10%, San Jose almost 10%, Seattle 8%, right? Compared to last year. And even those expensive markets, some of the most expensive markets in the country are posting strong monthly gains this spring. San Francisco up 1.3% last month, 1.5 in San Jose, 1.2 in Seattle. Those are expensive markets where, you know, a 3-4 bedroom house is costing way over $1 million in Seattle, for example. You know, and if you go to San Francisco, you need to earn almost $300,000 for housing to be affordable there. Okay. So you have these expensive markets making a strong rebound. Home builders are seeing that the activity is just not fading, hasn't faded completely, that demand is still pretty strong, that there's a lot of families that are waiting to move into units. And another thing, by the way, is one of the things that's really interesting is that Zillow data shows that competition for smaller homes is heating up. So you're also seeing at the same time that, you know, when prices are higher and mortgage rates are higher, buyers tend to shift to more affordable units, less pricey units. So the competition for entry level homes is heating up. Also, first time home buyers that were priced out during the pandemic that are just waiting for their turn. They're waiting, ready to jump at every opportunity to buy a home. And so all of that stuff is combining to give builders hope that demand will be there. And so they're getting excited about that. Also, by the way, it also means that if builders are confident that demand will be there in the future, that they're going to start building again. And right, we saw housing starts decline somewhat when compared to last year, but they seem to be hitting a low and turning a corner. You know, in the first quarter of this year, we started to see in February and March, housing starts, single family starts even, right? Multifamily starts, but also single family starts start to turn a corner and start to go up a little bit again. And so that's what that means, right? Builder confidence means that builders expect housing demand to be there. And if they expect demand to be there, they're going to start building again. And that's good news for a U.S. economy that's plagued with severe housing unit deficit.
Redfin gives me updates on the value of my home in ranges. And I have noticed in the last 3 months that what was the top of the range, if I were to sell my house, that is now bottom of my range. And it's about a $30,000 range there. It's fascinating. It's very interesting to watch. Always fun to talk with you about the housing market. You're way dialed in. For Orphe, Divounguy, that's been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.